The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the September edition of Digging into the BI. This is where the Better Investing members from Maryland, D.C., and Virginia get together and look at the featured stocks from the September issue of their magazine, which is Qualcomm and Align Technology. In addition, we have two other stocks we're looking at, Tractor Supply and Rio Tinto. So this has been put on by the D.C. regional chapter and the Maryland chapter. Glad you're here. Thank you. Let's go to our next slide. So here's our standard disclaimer. This is for educational purposes. If we own or talk about a particular location in terms of stuff we use to analyze stuff, it's not an endorsement. We believe, as Better Investing does, that you should conduct your own research and analysis before making any stock purchases. And the securities that we talk about, again, are just for our own personal stuff. We're not trying to promote any websites, products, or services. And if you see down below the hyperlink there, this session is being recorded and will go up on our YouTube page. Next slide. So here we are. Again, most of you are regulars from what I can see there, but for this going out on YouTube, who Better Investing is, this is the location. And up at the top of every slide is the URL for Better Investing that will take you to their headquarters, which is just outside Detroit. And down below, we're an investment education organization. You can click on that to find more. And we focus on long-term fundamental investing, and that's also a hyperlink down below. And we are all volunteers. None of us are in this profession professionally. Next slide. So we believe, as the two founders there, that's Tom O'Hare on the left and George Nicholson on the right, that investment education is a learn by doing, and that's exactly what we're going to be doing here, is showing you how we do it. And you can apply these principles or not, your choice. Next slide. And here's that YouTube channel I mentioned. If you click up on that top, the light blue that's underlined, if you download the handouts, that will take you to that URL location. Right now we have 33 subscribers. We'd like to see if we can get up over 50, but this should be up there maybe later on tonight or early tomorrow morning. But take a look at that and share that with people if you're trying to convince them of the benefits of better investing. Next slide. So I know most of you are regulars, but in case you aren't, here's the way to sort of navigate. Go to webinar. Over on the right-hand side, you have those two big green circles that are right near the images there. Those are things where you can grab and move that away from where it is if it's blocking your view of something. And then that arrow with sort of a light orange background, you can click that to open and close that to get into there. And you can write questions where we have the arrow going to the question box. You can pull that out and be able to do it. And we will, you're naturally defaulted as muted, but when we get to question time at the end, we can unmute you. You can raise your hand. But if you want to, you can write questions during the course of the presentation, and we have Jonathan who will be watching over those things. So go ahead. Next slide. So again, for people that don't know how to use GoToWebinar, there's a hyperlink to a 4-minute video on getting started. A lot of times people are always wondering, I can't hear, I have audio problems. And that's where you'll be able to see where you sort of have that purple arrow, the second one of the three there, that will take you on out to see if you're on your computer like I am, that are using your computer audio. You can also listen to this on your phone. And this is the time where you have the green arrow at the bottom, and that's where all the handouts are. So please make sure to download those handouts. You won't get this if you're on YouTube watching it later, but go ahead, you'll get the entire slide deck and the 4 completed SSGs, so you'll be able to follow along and look at things at a later date, because we move through this pretty fast. Next slide. So again, for people that are regulars, this shouldn't be a problem, but to make this thing easier, you can sit there where we have the zoom there. You can make this a full screen by clicking that down arrow where the 1 is. It says 87, and that would be able to make it where you can make it full screen and take a look. And you can also, where number 2 is, if you want to, you can just click that and with your mouse, and you will get a screen capture of the image that's up at that particular time. So use those things along the way if you want to help remind or refresh yourself on it. Next slide. So why are we doing this? Well, because we really believe in the better investing philosophy and approach. And there's a hyperlink to a 390-day trial. If you're not a BI member right now, you can find it again with the URL up at the top. We're focusing on beginners or people that maybe want to improve their judgments on the SSG or the stock selection guide. We're trying to do the best practices. And we're also trying to be able to promote our two chapters, the Maryland chapter and the DC regional, and the model clubs that we have. And if you're in the area, we want to be able to help promote your club through Visit a Club program and just really be part of our overall community here in Maryland, DC, and Virginia. But if you're outside that area, you're more than welcome to be here. Next slide. So we're going to, in just over an hour, we're going to do 4 SSGs. We're going to do the 2 featured stocks from the Better Investing magazine, the Stock to Study and the Undervalued feature. And then we have 2 others that are usually been found through the BI website or the magazine. This one, we have one that's from a club's old friends list, and the other one is a custom screen that shows up. But down below, there's where you have first cut. Those are all the different places. There's an enormous number of great stock ideas that a lot of people in our community don't use that are part of your membership. So we're just trying to show you how to dig into your BI and get benefits from it. Next slide. So to be able to know where to find where these upcoming stocks are, this is again a hyperlink up at the top to About Us and news releases. And the 2 stocks we're going to be talking about tonight, Align and Qualcomm, they were announced back in at the end of June. So they already have that. Church and Dwight and Ford, which will be next month, they've been up and been there for over a month. So you can be able to take a look and start practicing in advance. And I sort of recommend that if you want to learn how to get better at analyzing stocks. Next slide. So if you don't want to miss any future announcements, what you can do when you sign in as a BI member is up in the right where I have the red circle for my account. If you click on that, you'll go over to the right-hand side where I also have the red lined arrow where it says Home My Account. And then underneath that are all the things that you can do. The green circle where it has the email and product subscription information, if you click on that, it will take you over to the far right where again, that's in green, and you can be able to sign up for your local chapter news where you have that arrow sort of going to it. But before you hit that Save Changes, I like to go on up where the yellow highlight is for the BI Weekly newsletter. And if we go to our next slide, we'll be able to show you that. And this is it. It's a weekly newsletter that just goes out to members, and it highlights a lot of the things that are going on. It comes out around the close of business on Thursday, and if you signed up for it and you're not getting it, check your spam filter. I'm highlighting the one down there. There's 4, and actually I found all 4 of them very, very interesting. Up at the top, the online demand webinar, that was from the online chapter, and they had Scott Horsberg talk about a behind-the-scenes look into the repair shop. And I found that very, very helpful. So you can go back and watch that. They have a nice screen for small companies after that for stock ideas. All of us are always trying to find good stock ideas for small companies. Look at that. I like the detailed estimates, the Learning Center one. That one is about over a year old, but really good. But this one is it's a new feature with the online tools, which is the audit feature. And if you click on that and watch it, you'll be able to learn what's going on. So that's a lot of information just there. Let's go to our next slide. And you can connect with us on Facebook with both chapters. The DC regional and the Maryland chapter have that. We're putting out notices there. And it's an opportunity to share it with non-BI members so we can be able to recruit people to our approach and our investment philosophy, which we really strongly endorse. Next slide. So, Cheryl, why don't you tell us about what's coming up in the DC regional chapter?
We have the basics of the stock selection guide and beyond, our SSG class, and that will be, the first class will be Saturday, the 24th of September, coming up in about 2 weeks, and then followed by the very next Saturday, which is the 1st of October. You can go to the registration for that online under the events, and the cost is $20 for individual Saturdays or $30 for both. And you can sign up now. There is an Eventbrite where you can pay, and then you can hit the register button. You will get then an email later on that will link you right to the class at the appropriate time that the class starts. Alrighty.
Okay. All right, thanks. Let's keep going.
Yep.
Jonathan or Kent, do one of you want to tell us about the Maryland chapter? Jonathan, why don't we have you take over or do that one?
Okay, so the Maryland chapter, we have 2 meetings a month. We meet on the 1st and the 3rd Thursdays of the month. And what you're looking at on the right is our summer newsletter that was just published. So there's a lot of great information regarding what's going on with the Maryland chapter. We have 3 upcoming webinars: Thursday, September 22nd, Friday, and Saturday. There are going to be some excellent presentations regarding planning for retirement. So go to the BI website and click on the registration button and register, and we will see you then.
And up at the top, if you see where it says betterinvesting.org, this one is in green and it has a /chapters Maryland. If you click on that, again, when you have the download for the slides, you'll be able to go straight to the Maryland chapter page. Next slide. And tell us, Jonathan, what's going on with the Maryland Model Club?
The Model Club is going through a restructuring at this point, so we will have we will keep everyone up to date as to what's going on. We are anticipating revitalizing the club by the 1st of the year, so just stay tuned. And when you go to our chapter website, there may be some updates regarding the progress that we're undertaking at that point.
Thank you. Looking forward to hearing about that. Okay, Ken, tell us all about your club that you're a part of.
Okay, so I'm a member of the Happy Destiny Investment Club. We started in 2001 and we currently have 6 partners. We meet on the 3rd Friday of each month. Meeting usually from 7 o'clock to roughly 9:45. We've been meeting online. Our education topic for the next meeting is the 5 keys on how to build a defensive stock portfolio. And it looks like we have 3 stock presentations for our next meeting, ECG, 5, and EL. If you have any questions, you can reach out to us at diggingintothebi@gmail.com.
Thank you. Next slide. Richard, tell us about your club.
Okay, the Montgomery County Model Investment Club, MCMC, was started in 2017. We currently have 8 partners. We meet on the 3rd Wednesday of every month. The next meeting is September 21st. We were meeting at the Rockville Library until the pandemic hit. We currently use GoToMeeting, and we're welcoming new members. We have a monthly education segment that runs about 30 minutes. We'll be on adding judgment series, estimating sales. Our stock to study is to be determined at this point, and our point of contact is shown on the slide.
And that's a fine looking picture of all of you there. Next slide. Cheryl, tell us about your club.
McNova, which is the Model Investment Club of Northern Virginia, was started in 2008. Currently have 12 partners. It runs on the 2nd Tuesday of the month, so the next meeting is September 13th from 7 to 9 p.m. We are meeting virtually. There is our GoToMeeting link, and you can also dial in using your phone at that telephone number. Our education is charting a course to better sales growth forecast, and our stock study will be the Tractor Supply Company. And there is our point of contact address if you need some more information.
Thank you. And tell us about the Visit a Club program.
All right, Visit a Club is actually, I think, divided up into two different things. First of all is promoting clubs that are looking for members. And there you have the listing for both the Maryland chapter and the DC regional chapter. So these are clubs that are actively seeking new members. The other Visit a Club will be if you wish, you have a club and you wish a chapter director to come out and make a visit. You can contact us at the point of contact that is either on either of those two chapters' websites for general contact, and let them know that your club would like a director to come out to, talk to you about what's going on with the better investing changes on the website. The list goes on. It all depends on what your club would like to have some education on, and we'll be happy for them to set you up with a director to come in virtually or in person, meet during your club time. And so just let us know and we can make that arrangement. Thank you.
Thank you. Okay. And here I'm going to put Jonathan to work. What I want to check, we always put this up, is I want people to write in the question box as we're doing this. Which way do you read the BI magazine? I have on the left-hand side the app. So, if you use the app, go ahead and type in the app. If you go traditional and wait for it to come to your post office, do that. Or do you look at it on the e-magazine when it comes into your website? Or you could be like me, where I look at it all three ways. I mean, I have it on my app. I also have it on my I have the latest issue right next to me right now, but those are the different ways that you can take a look at it. So that would sort of help us. So go ahead and type in there. We won't stop in there, but just sort of keep track of that, Jonathan, and we can come back to that at a later point. But those are all the different ways we can do it. Let's go to the next slide. So again, if you don't know how to do the app and to get the mobile devices, over on the left-hand side is a green arrow. So if you're at Learning Center and BI Magazine, if you click on that, that will walk you through the steps. It's a different sign-in registration than it would be if you're just going through your desktop computer or the like. And then the second thing is the red arrow, the analyst reports and other resources. Those are the additional information that they always talk about with the two featured stocks. Again, the stock to study and the undervalued feature. And if you click on that one, that will take you to all the additional information that's available that did make it into the magazine. So use that. Next slide. And we always like to feature one column, and here's the member story column from this month. And this is a club that's actually from our area. They're in Prince George's County. I think they're predominantly in the Laurel area. But one of the things that's really kind of cool is that you can just submit your own. It's a chance to be able to promote your club if you wanted to, and for readers like me to sort of see how your club operates. So they've been around since '96. They meet in libraries around there. They have 16 partners, and 5 of them are still original, and they have a really healthy portfolio value. And there are some of the things that they do. They have a social, 2 annual socials, a Facebook page. They have some monthly training, and they follow the BI principles, and they grow through club referrals. So take a look at that column. And again, if yours is featured, let us know. We'll feature it. Next slide. So this is what the other thing is that we like to show you is at the back of every magazine on page 51 generally is the investor events column that are coming up. And they're sort of divided into annual meetings. The stuff in blue there's 3 chapters of annual meetings, and they all have events that are free and are going virtual. So you can be able to check in on that. And then down below are some investor events that are going on. I featured the Pennsylvania chapter, but I also wanted to alert you, I got some stuff late today that South Florida is doing some stuff. So go ahead and take a look at the South Florida chapter, again, in the latest issue of BI magazine, or again, when you download this, you can blow this up and take a look at it a lot closer. But all their events are free down in South Florida, and they're virtual, so you can stay right here and do it. Next slide. And Cheryl, why they already have the October issue already out, and do you want to tell them about the one that's particularly in blue that's going on, that's a joint program with the Maryland chapter and the DC chapter?
Yeah, we have been having some programs jointly with our two Mid-Atlantic chapters. One of them is the stock selection guide classes. We each have a different class right now, but we'll see how that works for the future. Ours is, as I said before, coming up on the 24th and the 1st of October. And so also we have, with the Maryland chapter, we have education series, as well as this next edition of Digging into the BI.
So we have a program there that's, again, if you look at our website, on the Monday, October 17th, and that will be a really good program. We're going to have several more that we're working on, so keep in touch, and we'll tell you more about it. All right, enough of this. Let's go to our next slide. We threw a lot at you. Okay, we're going to do the first two in core. We're going to do a line that Cheryl's going to tell us, the stock to study there. And then after that, we'll go straight to Tractor Supply, and Richard will take us on that one. So take it away.
All righty. Align Technology is a global medical device company engaged in the design, manufacture, and marketing of Invisalign clear aligners and iTero intraoral scanners and services for orthodontics and restorative and aesthetic dentistry. Align also provides ExoCAD computer-aided design and computer-aided manufacturing software for dental laboratories and dental practitioners. Their products are intended primarily for the treatment of malocclusion. Malocclusion is a bite that doesn't align the teeth properly from front to back. It's often characterized as having crooked teeth or a poor bite that can lead to oral health complications like crossbite and overcrowding. As the teeth are misaligned, it becomes difficult to perform vital oral functions like chewing, biting, and speaking. Align Technology is this month's Better Investing magazine stock to study. The company was founded in 1997 by two Stanford University MBA students, neither of which had any orthodontic credentials or background. One of these students had just had their braces removed and had been given retainers. The student questioned why his teeth could not have been straightened initially by a retainer. They started with a basic concept: how to use technology to straighten teeth. Needless to say, the orthodontic community was very skeptical. In 1998, the FDA approved their system, and they began their sales in 1999. From 97 to 2000, they raised $140 million in venture capital, and in 2000, they did a $31 million television ad campaign. It was the most aggressive advertising campaign that the dental profession had ever seen. In 2001, they had an IPO, and they raised an additional $130 million. In the early 2000s, most of their money was spent on marketing and advertising because their system was so radical from braces that they had to get the word out to the consuming public. They became profitable for the first time in 2003, and in 2005, Harvard School of Dental Medicine required all graduate students to become certified in Invisalign prior to graduation. In 2007, the Academy of General Dentistry approved Align's Technologies program for continuing education. Support, software engineering, pre-production, and administrative functions are done from Align's technology headquarters in Tempe, Arizona. The manufacturing of Invisalign aligners is performed in Mexico, and treatment plans are created in Costa Rica. Align Technology also operates separate subsidiaries in Hong Kong and Australia, that sell Invisalign in their respective markets. Align Technology provides training and certifications to doctors, and the Invisalign system grew from 80,000 patients in 2002 to 175,000 in 2004. It won several awards for stereolithography, medical design, and test growth. Currently, 13.4 million Invisalign patients have been treated, including 3.5 million teens. In 2017, the company was faced with the challenge of the expiration of its patents on its Invisalign system starting in October, and the beginning of generic competition. Still, their biggest competitor was the older process of metal braces being touted in orthodontic offices. Align then sold their iTero scanner to general practice dental practices. The scanner, Invisalign Outcome Simulator Pro, a powerful chairside tool for driving Invisalign treatment acceptance and practice growth with highly realistic in-face visualizations of the patient's potential future smile. iTero element scans are engineered to work with the Invisalign system, the exclusive Invisalign Outcome Simulator, OrthoCAD, and OrthoCAD Viewer, and are currently available in over 2 million dental practices. Most iTero scans take 10 to 15 minutes to perform. Once they're done, both professional and patient can spend as much time as they like going over the scan and visualizing both projected progress and the final expected end result. Those 2 million doctor practices could potentially lead to 500 million future patients in the Americas, Europe, Middle East, and Africa region, and the Asian Pacific region. Step one, the Align platform begins with aiming its marketing to inform these customers, locates, trains, and certifies the doctors to integrate the system into their office, provides patient financing for lagging insurance coverage, and provides planning and technology for quick and less evasive treatment. Step two provides dental practice with digital platform tools, and step three connects both patient and doctor with labs that offer presentation of final treatment outcome and the tools to arrive at that outcome. Finally, there is the Align digital workflow that drives the consumer demand and connects that demand to one of the 2 million practices by showing a virtual 3D picture of the treatment outcome that plans the ortho and restorative treatments, delivers customized digitally designed aligners, monitors virtual treatment tracking, and maintains with Vivera retainers. They are made by the same team that makes Invisalign clear aligners. The Invisalign brand consumer concierge service teams have connected approximately 493,000 potential customers with Invisalign doctors and reach more than 4.3 million customers globally. The Invisalign brand consumer concierge program successfully provides leads to doctors that may otherwise not obtain. The Invisalign brand consumer concierge service teams are located in the US, Brazil, Singapore, Philippines, China, Australia, the UK, Poland, Bulgaria, Saudi Arabia, United Arab Emirates, and Germany. Value line 18-month target price range is between a low of $227 to a high of $491. Current price is $267.79, trending toward the low side. While 5-year projections range between a low of 16% and a high of 29%, with the price bar dipping below the value line, as you can see in the red box to the upper right. Cash flow per share is estimated at $10.15 in 22 to $27.50 in 27, while earnings is forecasted to grow from $8.80 to $24.45. While shares were ranked at 3 average back in July, analysts believe that they offer wide recovery potential 3 to 5 years out. Morningstar ranks Align Technologies a solid 5-star buy, selling at 44% discount from their fair value, with a narrow moat due to the cost of the technology involved in the Invisalign process, being somewhat prohibitive to its competitors. Also, the other two competitors listed by Morningstar are trading at a distinct premium to their fair values. Manifest Investing lists Align as tops in medical device industry and healthcare sector. It also shows a 5-year sales growth forecast of 22.3%. And the graph below shows a steady quality, the blue line, and increasing projected annual return, par red line, with a decreased price bars, the green shading. Remember, the average PE ratio of 24%. These
5 minutes.
Thank you. These 4 areas are the data points that the SSG core uses to evaluate the management of a company. 2 founders left the company back in 2001 with a current CEO and board of directors with increased business and dental experience. Pre-tax profit ratio tells us how many cents of profit the business has generated for each dollar of sales before deducting taxes, while return on equity is a gauge of the corporation's profitability and how efficiently it generates these profits. In both of these ratios, the line is at or near the top as compared to its peers. While they have 0 total debt, their changes in the tax law in 2016 included capital leases. However, Align is still carrying the lowest debt level of its peers. Forecasting sales growth, I was conservative and chose 12.9% that estimates a 5-year projected sales of 7.3 million. Likewise, earnings per share picked a growth rate forecast of 15.9, which results in a 5-year projected earnings per share of $16.35, close to double the current rate for both sales and earnings per share. Assessing risk and reward, I kept my high price to earnings forecast closer to a more reasonable 31.8%, which resulted in a high stock price forecast of $520.10. I also decreased my average low price to earnings ratio to a more conservative 21%, with a low price forecast of $164.20. Remember, the Manifest Investing forecasted an average PE of 24. This results in an upside-downside ratio or gain to loss of 2.8 to 1, which puts it only slightly out of the buy range. The potential annualized price appreciation using the forecasted high PE is 15%. Since Align does not currently pay a dividend, that's also the annual rate of return.
2 minutes.
The potential annualized price appreciation using the forecast high PE is 15. And here again, as I mentioned, same for the annual. Align is here for 3 reasons: well positioned for growth in the future. They have a first mover advantage and build a dominant market share and a brand synonymous with clear aligners. Their 10 million plus treated patient data set is not done by competitors and grants the company an edge in new indications of treatment. Also, increased adoption of clear aligner treatments of dental professionals, primarily general practitioners, offers the treatment and market efforts to attract more teen patients. Conclusion, it's a medium-sized company with a stable mode characteristic. They're a well-managed company. They're currently overvalued, but a buy price to satisfy the upside downside of 3 to 1 and 15% total return shown. And they're a worthy candidate to add to a watch list. Thank you.
Thank you, Cheryl. Okay, and now let's go over to Richard and hear about Tractor Supply. Take it away, Richard.
Yes, good evening. I'll be presenting Tractor Supply Company, and it's listed on the NASDAQ exchange under the symbol TSCO. And I used a number of the BI investing website tools to find the stock. Next slide, please. So the agenda for today is how did I find the stock and what attracted me to it, and how does it make money, I also looked at peer group comparisons from a number of sources, and then reviewed industry analyses from various websites, and then go over the historical performance, and then report on what Tractor Supply thinks they'll be doing in the 2021-2022 timeframe, and then move into sales and earnings growth adjustments, and finally high-low price projections and a conclusion. Next slide, please. Next slide. Okay. So I used the Finding Great Stocks stock screening tool, and the criteria I used for the selection of those stocks is shown in the box in the bottom right. And that brought up about 20 possible stocks to look at. One of them, Tractor Supply, caught my eye because I had seen it before. And next slide, please. I had also seen it on the heat map, and I was curious. I identified Tractor Supply and also another stock, Five Below, at symbol FIVE, which, full disclosure, MCMC owns. And I was interested in comparing the two stocks to see if there was something that Tractor Supply had to offer. And it also happened to be the first stock I studied after I joined BI. Next slide, please. Another source of information is the first cut stock report. And I found a study back in January of 2021. And it was made for interesting reading because a lot of what Judy had to say about this stock, I tended to agree with, and our conclusions weren't too far apart. So it was a way of confirming that what I was reading and assessing was in agreement with somebody else. The company size is large. It crossed a $10 billion sales volume. So it's either small, large company or a large, medium-sized company, but it's just beginning its large company phase. And the industry is specialty retail. Next slide, please. So how does the company make money? It's the largest rural lifestyle retailer in the US. And they offer an extensive mix of products for home, land, pets, and animals, with a focus on product localization and exclusive brands and customer service. The sales category surprised me somewhat. 47% of their sales is actually livestock and pet supplies. 21% was hardware, tools, and truck. 21% seasonal gifts and toys. And the remainder is clothing and agriculture. Amazingly enough, Tractor Supply does not sell tractors. They have 48,000 employees, and they have both physical store assets and digital online capabilities for customer convenience. Next slide. So the first Tractor Supply store was opened in 1938 in Minot, North Dakota. And they currently have 2,016 stores in 49 states. And they also have 178 PetSense stores in 23 states. They're forecasting to have 2,900 stores by 2031. You can see the distribution of stores, primarily the population density on the eastern shore, on the eastern portion of the country rather, shows the number of stores. Next slide, please. Okay, so I looked at peer groups, and my first stop was CFRA and under specialty retail, and they identified 10 possible peers. I chose Dick's Sporting Goods and Five Below because I had a special interest in Five Below. And I looked at the first stop I was going to do for the third stock was Petco Health and Wellness Company, symbol WOOF, but it only had 5 years of history and 4 of which were negative earnings. The other stocks, companies were too specialized, I felt, Bath and Body Works, Signet Jewelers, so I rejected those two. Next slide, please. Manifest Investing also identified 5 in Dick's. Restoration Hardware was specializing in furniture, and Williams-Sonoma was in kitchen supplies. So I really didn't like those two as comparisons. Morningstar had PetSmart, but it was a private company, and they also identified Lowe's, which I felt was representative. So my choice for the peer group was Dick's, Five Below, and Lowe's. Next slide, please. The CFRA industry analysis for specialty retailer Sub-industry, the two I chose was home improvement and pets products. Both of those outlooks were positive. And CFRI felt that the specialty retail group is well positioned to benefit from aggressive store expansion, which is exactly what Tractor Supply is doing. They expect their revenues to grow 9% in 2022 and only 7.5% in 2023, which surprised me somewhat. You also see sales normalizing towards pre-pandemic levels in mid to high single digits. And you'll see a little bit later on, I assume that number was about 8%. And Tractor Supply continues to invest heavily in growth and spending on technology. Next slide, please. Morningstar identified it as a narrow moat, meaning its competitive advantages should be in place for the next 10 years. And they felt that Tractor Supply had differentiated itself through its products and customer demographics. And they focus on do-it-yourself rural consumers on higher end products than those found in retailers such as Lowe's. They also believe they've reached critical mass in the consumer segment, which enables them to have better efficiency and gains ahead from that category of sales. Next slide, please. So let's take a look at the historical growth in sales and other factors. So the first one up is sales. You can see the black line is an up straight and parallel up straight line, black for Tractor Supply. Identified in green, the 5-year average shown on below, which was really too small to see, but you can see 5 below has a 22.5% sales growth, beating Tractor Supply, but 10.7% isn't too bad for a small, large company or a large company. Next slide, please.
5 minutes, 5 minutes.
Earnings growth rate, 5 came in at 78.1%, but that's alarmingly high and is unsustainable. Tractor Supply came in at 16%, which is very respectable for earnings growth rate for a large company. Next slide. The takeaway from historical stock price is the fact that it's currently trading slightly below midway between its high and its low for the year so far. So the stock may be on track to be undervalued, but that's to be determined. Next slide. Pre-tax profit management performance, 11.5% for 5, again, led the way. Tractor Supply was around 9.2. You can see by the black line that Tractor Supply dipped somewhat between 2017 and 2018 and recovered nicely since then. Next slide. Return on equity. Here, Tractor Supply was the best of the 4 stocks. And Lowe's has a very high debt showing a negative return on equity for the last 5 years. Next slide. Debt to capital, again, Lowe's is showing up as very high in debt. Tractor Supply was 48%, and 5 was at 33%. Again, 5 led the way. You'll notice that all of them increased their debt significantly in 2019 due to an SEC ruling that lease payments must be on the balance sheet. But Tractor Supply is still below the peers at 55%. Next slide. So Tractor Supply in annual performance for 2021 shows net sales, comparable sales growth, and diluted shares, net income per diluted share were all up significantly. In 2020 and 2021, they had vast improvements, probably because of the pandemic and the sale of pet supplies and home improvement products. And they also noted in 2021, they have a cash return to shareholders in dividends and stock buybacks, significant. Next slide, please. For the quarter-over-quarter returns, they're showing moderate gains. Diluted earnings per share again show up at 10.7, right on target. Next slide. The 2022 outlook, they're showing net sales, they plan to grow 10.2% and earnings per share 10.8. But it should note that Tractor Supply has made significant buybacks since 2012, which is boosting their diluted earnings per share. Something to consider. Next slide.
2 minutes, Richard.
Okay, sales growth. I used a number of sources, and I put a table, and I took the average vertically by year, and I computed the compound annual growth horizontally, shown in the right column. The average for all the data was 8.4%. Historically, they've been growing at 10.7%, and my judgment was 6%, based on the fact that in 2023, I see a significant dip in sales creation. I also looked at value line projection, and they showed $17.7 billion in sales, and 6% annual sales growth achieved that number. Next slide, please. Earnings growth is pretty much the same. I deleted manifest investing because I felt it was an outlier, and I wanted to keep a conservative view. The average was 9.7%. Historically, they've been doing 16%. My judgment was 8.5%, based on the value line projection in 2026, give or take, for $13.60 a share at 8.5%. Earnings growth met that target. Next slide. The high and low price, the average 5-year high was 24.7. I used 25 times the high earnings per share, which led to a high stock price of $341 a share, which meets nicely the high end of the range that value line projects of 345. The low end, I initially used a low 5-year low PE of $14 a share, 14 PE times the low EPS forecast led to $127 a share low price stock forecast. And that was 32% below the current price, which I felt was too low. So I increased it to $150 a share, which is 20% below the current price and still below the 52-week low. That led to an upside downside ratio of 5.3 to 1, puts it in the buy zone, but the compound annual growth was only 13.8. I prefer 15. So the price would have to drop to 178 to meet that target. Next slide. So in conclusion, Tractor Supply is a large size, steady growth company. It's well managed. It's trading in line with its 5-year average PE. It's a buy up to $178 a share, and it's worthy of further consideration. But I would also consider 5 as an alternative stock in the specialty retail industry. Thank you.
Thank you, Richard. Great job. So now we're going to move over to the SSG Plus, and we're first going to look at Rio Tinto, and then we'll finish up with Qualcomm. And let's move it over to Ken.
Okay, I'm trying to, all right, there we go. Can everyone see my screen?
Yes.
Okay, cool. All right, so today I'm going to present Rio Tinto. Let me move this to the side here. Happy Destiny maintains a list of previously owned stocks called the Old Friends list. Periodically, we will revisit that list to see if there are any potential buys. We owned Rio Tinto in 2011, and we held it until early 2015. I'd like to present a short video that will give you a good sense of Rio Tinto's business and international presence. If you have sound issues, don't worry. You can follow along by reading the subtitles.
自分が住んでいる家も通勤に乗っている電車も、来ているこの会社のオフィスも、全て、鉄でできているということです。鉄のサプライチェーンは非常に長いですね。まさにピルバラから始まって。
50 years ago, we were loading ships that could only take just over 50,000 tons. Today, I'm loading a ship that can take 3 times that amount, not a problem in the world.
There's been a lot of advancements and changes in their production, which has sped up the whole process. train at the moment is controlled purely by the operators in Perth.
We can monitor ships and the train movements. We've got SMS 3D, which models the stockpiles. It's fantastic, cutting edge.
Central Control operate these trucks and program where they're going from down in Perth. It's the largest autonomous fleet in the world, and it's a privilege to be a part of that operation, and I'm really looking forward to what the next few years hold for us in advancing the fleet even further than what it already is.
Rio Tinto is one of the original founding companies spearheading the development of the Aluminium Stewardship Initiative, focused on the responsible production, sourcing and stewardship of aluminium. Our standards are designed to be applied at all stages of production and processing.
Aluminium plays a critical role for us, and our promise to the consumer is that they're going to have a sustainably produced high-quality product. Rio Tinto were a very early adopter of the concept of responsible aluminium, and we're very proud to be working closely with them together as part of the ASI.
We brand our low carbon footprint aluminium as Renewal. Renewal is a guarantee of 4 tons of CO2 per ton of aluminium maximum.
Ici au Saguenay, au Québec, on fait de l'électricité pour produire de l'aluminium. Nous, à Chipcha, en fait, nous avons aussi une turbine à haut rendement énergétique, plus récente que les autres. Grâce à ça, on réussit à maximiser la goutte d'eau, comme on dit, pour produire un aluminium plus propre.
À l'usine en P60, on est des pionniers. On est les premiers à utiliser la technologie en P60 à l'échelle industrielle. Elle est basée sur des procédés à haut rendement, des systèmes numériques de pointe et des innovations environnementales très avancées. Et je suis très confiant qu'on est en bonne position pour l'avenir.
Oyu Tolgoi is one of the world's largest copper and gold mining projects and is a partnership with the government of Mongolia. I take great pride in positive impacts we make on our community every day, investing in sustainable development, supporting national and local businesses, health and education.
Having obtained my degree in mining engineering with Rio Tinto scholarship, I'm now part of the underground project, working as an engineer planning. Our underground team is excited to unlock the potential of this resource and build a truly multi-generational enterprise and continue bringing real value to Mongolia.
We're partnering with the increasing number of Mongolian companies, and these companies have created more than 35,000 direct and indirect jobs here locally. We are proud of the positive impact we're making and contributing to the prosperity and the livelihoods of Mongolia.
我们与中国的关系可以追溯到1个世纪之前。我们与中国的关系不仅仅是简单的一个客户供应商的关系，更是一种合作共赢的伙伴关系。中国对里头的未来将更加的重要。
It's an exciting thought that every piece of iron ore in this plant can go across the whole world and be turned into everything from skyscrapers to washing machines.
It's amazing to think that the copper we mine is a glowing communication between people, bringing clean water and lighting that homes very often parts of the world it needed most.
All right. So let's move back here. All right, so Rio Tinto produces iron ore, aluminum, boron, copper, lithium, and titanium. And demand for these products are driven by urbanization and decarbonization. And the demand goes out to 2050 and beyond. Lithium is the preferred material for electric vehicles. The company has a commitment to expand the role of lithium in its sales mix over the future as electric vehicles become more and more in demand. Rio Tinto is the second largest mining company in the world based on market capitalization, falling just behind BHP Billiton. Taking a look at the value line report, Rio Tinto is trading slightly below its cash flow line, suggesting that it is undervalued. The 3 to 5 year annual total return is projected in the range of 18 to 28% and has a financial strength grade of A. Commentary suggests that the balance sheet is in good shape and that it's best to wait for a better entry price. So at the time of the report, it was at $64.54. It closed this past Friday at the price of $57.93. So it has pulled back, which I do see as an opportunity here.
5 minutes. 5 minutes, Ken.
Okay. Look at the value line report. Morningstar has a fair value of $78 with a stable moat trend. You can also see that Rio is a buy compared to its competitors, BHP, Fortesque, and Anglo American. Take a look at the bull case for Rio. The capital allocation is improving. Operations are well run, large scale with low operating cost assets. And it is a direct beneficiary of China's appetite for natural resources. With respect to the bear case, Rio paid too much for acquisitions in the past, and governments may use the company's revenue as a source for tax revenue to plug shaky budgets. Taking a look at the front side, the SSG visual is rather nice, up straight and parallel. My sales and earnings judgments, or sales and earnings for the previous quarter were 42.3% and 115.9% respectively. And then taking a look at my front side judgments, my sales and earnings judgments are 4.5% and 6.5% respectively. Both were derived from value line estimates. And then looking at management, both pre-tax profit on sales and ROE are trending positive and trading above their 5-year averages. The debt to capital is trending below its 5-year average. I have no outliers for the PE history or the PE ratio. Rio is trading below its 5-year average PE. I use Section 3 averages for my high and low PE estimates. My high and low price for Rio is $152.60 and $44.70 respectively. This results in an upside downside ratio of 7.2 to 1, and the price is in the buy zone. My return range is 23 to 27.6%, which is in line with the value line 3 to 5 year total return projection. So in conclusion, Rio is a large size commodity company with impressive cash flow growth. It is well managed. It is undervalued and trending below its 5-year average PE ratio. I believe it is a buy at the current price, 7.7 to 0.2 to 1 upside downside ratio with a 23% return. It is certainly a worthy candidate for your consideration.
Thank you. Let's do this. Let's bring it back to you, Cheryl, and we'll have Ed finish this off with Qualcomm.
Good evening, everyone. I'm going to be doing Qualcomm. Qualcomm is the featured undervalued stock for September 22. It's also among the top 100 BI stocks. Next. And can we go into full view mode? Thanks. So in the article in the BI magazine, which starts on page 27, I kind of go through there to start with, and I read for things that kind of strike me as unusual or kind of interesting. So one thing is you don't often hear about stocks being kind of explicitly called out as far as not being in favor in Wall Street. And throughout this presentation, especially at the end, I think you'll get some insight into why it's somewhat out of favor with some analysts. Nonetheless, it also cites how Qualcomm is getting ready for 5G, and we'll talk a little bit about what that means in a few slides. Another thing that was noted was the PEG ratio, which is the PDE to growth ratio. Generally, anything under 1 is attractive, and they noted that it's at 0.60. So you don't find too many stocks that have this kind of ratio, and especially high-tech company as what Qualcomm is. And they did note that it had 19 years of pretty consistent dividend growth. So what else can we extract out of this 3-page article? Next slide, please. So I talked about 5G. Basically, we'll see this a bit on the next few slides, but one of the main focuses of Qualcomm's business is really selling licenses having to do with cellular communication technology. So they're lining up a whole bunch of new licensees for the patents and licenses they have associated with 5G. The other thing is, and I've talked about this in earlier presentations I've done with other companies, in terms of like a current trend now is you see a lot of PE ratios for companies dropping over the last year, 2 years. And what we find is that current PE for this high-tech company is 13. Not only is that low for a tech company, but it's also much lower than the average currently for the S&P 500. Important to note that most of Qualcomm's customers are overseas, specifically in Asia Pacific. The other thing is Qualcomm, you think of it as a chip company, and it is, but what it does is actually designs chips. It doesn't build them. This is similar to the situation with NVIDIA where they design them, but they kind of outsource the productions of the chip. This is the case also with Qualcomm. And as they look to where they're going to grow their business, what are the new business opportunities? 2 recent acquisitions kind of give us some clues. One is that they're getting much heavier and engaged in automated driving, specifically advanced driver assistance technology. Read this as, cars that kind of drive themselves. The second area that they've also gotten involved in is buying a company that specializes in actually building what we call ARM. ARM is just a particular type of microprocessor. This is an indication of Qualcomm wanting to get into the server chip business, which is a pretty lucrative area and one where a lot of people contend, but nonetheless, with their success with some of their other products, they think that they have a good opportunity. And lastly, and we'll talk a little bit more about this, but recently they've had some legal victories against Apple, the Chinese company Huawei, and with the European Union. This is pretty important because this has been one of the areas where they've had some contentions, some issues, some risks over their existence. Next slide. So what does Qualcomm exactly do? Really, they do 3 things. One is, and the first division there is QCT. Basically, they build things and they sell them. And predominantly, and as you can see, this is the area where they sell the most stuff. They sell chips, and their most popular chip is actually something called the Snapdragon. This is a chip that is found in most of the Android cellular handsets. It is a very popular product. It basically has a lot of functionality, and people buy a lot of these. That accounts for about 80% of their revenue. 20%, almost 18.8%, has to do with them licensing the technology. Qualcomm owns a lot of patents having to do with 4G cellular technology. And in fact, if you have an LTE 4G phone, you're almost guaranteed to be paying part of what you pay for that phone went to Qualcomm. And in fact, this is a very profitable, it's not very high in revenue, but it's a very profitable line of business. And part of it is that they charge typically 3 to 5% of the total price of a phone. That's a lot of money. And we'll see that doesn't come without any pushback on the part of the manufacturers or governments. And the last area is a very small investment, but they basically have their own little venture capital division. What they try to do is offer their cellular expertise to select startups in hopes of making them successful by leveraging their very unique information having to do with cellular technology. Next slide, please. So what do the analysts think? We'll go in order here. Number one, you can see that it's Morningstar considers it to be kind of undervalued right now. That's good. Number two, you can see that in recent quarter, it had a very solid performance. There is some caution to be heightened or to be highlighted in regards to possibly us entering into a recession and perhaps people not buying as many cellular phones as they would. But nonetheless, as you can see in items 4 and 5, generally the outlook is pretty positive in terms of their positioning and their momentum going forward. The last item I want to cite here has to do with economic moat that Qualcomm has. It's considered narrow and negative. The moat comes from their patents. The reason it's considered negative, in other words, the advantage is the economic moat advantage that they have is becoming less, is because of some of the legal problems or legal battles that they've had with a variety of different organizations and the concern over that at some point their very lucrative licensing agreements may be sort of made less lucrative because they're found to be unfair. Next.
5 minutes,
slide.
Ed, 5 minutes.
Yeah. So here we have an overview of their performance. In general, I use the numbers having to do with the analysis, the analyst consensus. But if you notice, I've actually been pretty conservative with even the numbers that were provided there. As a forewarning, I'm pretty conservative with a lot of other numbers that you'll see in subsequent slides, and I'll explain why a little bit later. At the bottom there, you'll also see that generally on some of the more traditional management metrics, they're doing really well. Next slide. So delving a little bit more into these individual numbers, as you can see, the 5-year average at 24.6 for a high PE. That's been decreasing, and even its current trailing 12-month number is lower than that average. Similarly, for the low average for PE, that number is still even higher than what the current PE is as far as the trailing 12 months, and currently today it's at 11.7. That's a pretty modest number for a high-tech company. Next slide. So when other numbers that we use in this SSG Plus is what the low price is estimated to be. I always like to take a look at the price chart to look for areas of support. You can see that on this approximately 2 years plus chart, there are probably 3 areas of support. I've selected the lowest one that corresponds to the low of the 2020 pandemic. I also take a look at trends and patterns associated with the PE. Important to note is that this has been decreasing steadily since the beginning of the year. So I don't want to necessarily use a 5-year average because I think the trend is telling us something that you need to be planning on a much lower PE ratio going forward. Next. So some of the specific numbers used are 18 for the high PE. This is even lower than I showed before. The average low PE, I selected a 10. That's also very conservative. And as I just noted for number 3 here, I selected the low price that was that it reached during the 2020 pandemic low. Even with all these numbers, this turns out to be a pretty solid buy at 3.7 to 1 upside downside ratio. Next slide. this kind of shows a visualization of what I just spoke about. So when I used all these conservative numbers and it still ends up being a pretty solid buy, this kind of gave me a little bit of this made me a little uncomfortable. So I said, well, so why would I, with all these conservative numbers, this still be a fairly strong buy? Next slide. So
2 minutes, Ed.
Thank you. So even with all these conservative judgments, how can it still be such a strong buy? Well, I think it's all about risk. And generally, I don't think I've encountered too many stocks where, in my opinion, risk has really been a big factor in terms of the stock not being popular in Wall Street, and seeing this in the analysis where the numbers, you would think that it's a slam dunk in terms of buying. So let's talk a little bit about where the risk lies. The risk lies in that China generated 67% of their 21 revenue. We all know about the geopolitical tensions between our country and China. So that represents, a big risk. Secondly, as I noted before, their royalty model is a very aggressive thing, and they're being challenged by, Apple, by the EU, by Huawei. Governments, companies are all pushing back on all this. However, to Qualcomm's credit, for the most part, that model has been kind of upheld, and they continue to use that as far as generating revenue. The other last risk, and this wasn't highlighted in too many places, but I think there's a very good parallel here, is that large customers can just decide, hey, I like Qualcomm's products, but I'm going to build my own, and therefore I'm going to save some money and maybe even do a better job. An example of where this actually happened was when Apple replaced the use of their Intel chips with making their own chip. The difference here, I think, is that, Apple built a much better product than the Intel chips they're replacing. Generally, the chips that Qualcomm produces and sells are considered to be very, very high quality. So I'm not quite sure it's exactly the same comparison, but it's still a risk. Next slide. So in conclusion, this is a large company. It represents a fair amount of high growth. It's well managed. It appears to be on sale based on, if you just took a look at the PE ratios and all that. Again, there's a decreasing trend on that. So I say that with some reservation. Per the numbers, it's a buy up to $145.70. I think it's a good candidate to purchase, but you got to be comfortable with the types of risks that I outlined here. Again, that's up to your individual preference and how you feel about those different factors and risk in general. That's all I have. Thank you.
Thank you, Ed. We had 4 very good presentations. So here they are. It's Align, Qualcomm, Rio Tinto, and Tractor Supply. And what we always like to do is we like to ask all the presenters to sort of say, where do all these stocks fit on the life cycle? You may say, what's the life cycle? Let's go to the next slide. And this comes from T. Rowe Price when he was not a mutual fund, but actually a living, breathing human being. And he talked about earnings of most corporations go through a life cycle, just like, of growth and maturity and decadence. And so now we show this up in the digital handbook. Let's go to our next slide. And this is sort of where you see it in the digital handbook. It's quite popular, this visual image. It's really T. Rowe Price. And we'll ask all of the presenters why they sort of selected these locations. And we'll go with you first, Cheryl.
Okay, Align is basically still going through explosive growth in total. They've had a bit of a slowdown with COVID and now with possibility of a slowing economy. And so that's tended to kind of push them further down the line. But I still think they've got some good years ahead, as it was said in the value line, that they will make a comeback, and also because of the technologies and the things that they're doing.
Richard, tell us why you picked that location for Tractor Supply.
Well, Tractor Supply is a maturing company, but it's just went through its $10 billion in sales milestone. So it's a relatively small, large company, still growing at a respectable pace of 16% earnings growth. So I put it just on the mature side, but it still has a significant growth ahead of it.
Okay. Ken, tell us why you picked that location for Rio Tinto.
Okay, so Rio Tinto has been around since 1873. They have 49,000 employees in 35 countries. So they're well established. Looks like they're pretty well managed. So I just think it's in the mature area.
And Ed, tell us why you picked that location for Qualcomm.
So when we think of how much further we have in terms of cellular technology and everything being interconnected, Qualcomm is going to get a piece of all that action. And so I think that they continue to be in a good position, albeit risky, to generate a lot more growth through their existing avenues, the licensing and current patents, as well as some of their well positioned and well thought out investments going forward.
Okay, thank you. It's now time for you guys to be able to vote. So let's go to our next slide. And, again, we're not asking you to say which one you want to buy right now. It's just based on these presentations, which company would you like to do some further research on? So Cheryl, if you can release the poll, and go ahead and vote just once. All right. We're just over 50%. Let's see if we can get up high level. We seem like we had a lot of people sort of paying attention to all this all along. We're up over 70. Can we get, let's see if we can get up into the high 70s, maybe even 80. One or two more. Let's see if we can get one more vote. You want to get one more vote? I guess not. Go ahead and close it out. And go ahead and share the fun stuff. There it is, folks. You guys like Align and Qualcomm are right there neck and neck. So again, make sure to download the handouts and the SSGs and then do your own research. So thank you on that. And now let's go to our next slide. And we're about time for our questions. And the first one I'm going to give to Jonathan. We asked our audience at the very beginning which way they look at their BI magazine, whether they use the app or whether they look at it electronically on their computer or whether they read it with paper. And what was the answer to that one, Jonathan?
Okay, 8 people had responded, and all 8 prefer the hard copy version of the magazine. One individual out of the 8 read both the mail and the web-based version. And if I throw myself into the mix, I would have to say that I prefer the hard copy version myself too, but I do read all 3, the app-based and the web-based e-magazine also.
We got some proud Luddites here. Way to go. Raise your hand, Luddites. Anyway, if you need to be able to reach any of us, there's the contact for the digging into the BI at the top, or either from the Maryland chapter or the DC regional. And there's a picture of us from down at Bink. And now it's time for us to be able to open up, Jonathan, and let's get some questions from people. Did anyone put any questions, or do you want to raise your hand and we'll have Jonathan dole them out?
Yeah, we have no questions at this point, but if anyone does have any questions, please step up.
Did Sophia have her hand up earlier? Did I miss that?
Oh, let's see.
Yes, Sophia, you do have your hand up. Do you have a question? Oh, and Alfred does as well. Oh, Sophia says she's still on mute. Oh, let me see if I can fix that.
There we
go.
All right, thank you. Can everybody hear me okay?
Yes.
Okay, great. So I just wanted to go ahead at Kevin's invitation to go ahead and add a couple of notes about some of the free programs that the South Florida chapter is offering. So I'll be the one leading some of the upcoming sessions that we're doing in the South Florida chapter. So the one that we're doing in October, the first Saturday in October at 10 a.m. Eastern, we're actually going to be going through the discounted cash flow analysis and tying back each component of the discounted cash flow back to the SSG and the preferred procedure in particular. The first session will be taking a look at revenue projections, but doing them in terms of by each individual operating segment of a company. And we'll take a look at how you can find different segments of the company within the filings and how to be able to do some of those projections. And then for the equity research series, it's actually going to be part of the Tuesday training workshop with the North Florida chapter. And that'll start in January. And so we're just going to go through a series of workshops to kind of talk about how to find some of the more Wall Street based equity research reports, but for free, and how to find them and how to interpret them and read them and things like that, and use them to kind of be able to better refine your analysis. I also did want to add a couple of quick notes about the Invisalign. I'm actually going to be going through the process myself, and I will say that the technology is actually really impressive. So what would take years on normal metal braces would actually only take months with Invisalign. And the way that they've really established the technology, including the scanning to be able to have the individualized retainers specific to your treatment program, is actually looks really impressive so far.
Thank you very much. Jonathan, back to you. What other questions?
Kevin, we do have one question for Ken. Is Rio Tinto an American company? This is from Fred.
They are based out of Britain. Or headquartered in.
Yeah, one of the ways you can
But
also.
They're an international company. They provide services internationally, but they're based in Britain. Yeah.
So they would trade as an ADR on the U.S. stock markets.
Okay, I don't have any other
questions. Yeah, I think we have a question there from Alfred. Oh, and he's asking. He has a question. Actually, Jonathan, he put that question up there for you.
Okay, the question is, did any of the analysis at Morningstar factor in the CHIPS 2022 executive order as part of their analysis? This is a question for Qualcomm.
Yeah, I did not. I did not see that, but as the follow-on comment from Alfred notes, my understanding is CHIPS 22 basically is to encourage U.S. foundries, U.S.-based foundries. As I noted earlier, Qualcomm is interesting, sort of like NVIDIA, where they don't manufacture the chips themselves. In fact, Qualcomm relies on both Samsung and Taiwan Semiconductor to manufacture their chips. So no, I do not think that CHIPS really has much influence on Qualcomm at all. Other than, frankly, it's always good for companies like this to have many more multiple sources that can build things, because again, geopolitical tensions that arise from Taiwan and out in Asia. So but that's a very secondary benefit, and I don't think that was the intent of the question. Correct me if I'm wrong, Alfred. Thank you.
Yeah, Alfred, you can. Yeah, there you go.
Okay, no, thanks. I appreciate the clarity. I'm still digesting this CHIPS 2022 Act, but it seems to want to force semiconductor companies to invest in America. And I didn't know if that would affect any of Qualcomm's suppliers, you know, even if they're basically just selling the license, if it would make a difference or not. But I think I just need to do some more homework, but thank you for your response.
Yeah, well, and to your point, I do believe that companies like Taiwan Semiconductor made commitments to start building a new foundry here in the United States, and if memory serves me correct, I think it's in Arizona. So there's that benefit, but you're right, it is to encourage U.S. self-reliance on chips being manufactured here instead of somewhere else.
Unmuted.
One thing I wanted to go back to is that when Fred asked Ken about Rio Tinto, if you download a stock and you're questioning whether it's a foreign company and it trades as an ADR, is that if you download it in the SSG form and you go to data and you look at the data component in there, it will check mark it if it's an ADR. And in the case of Rio Tinto, yes, it is. So just sort of an FYI for you. What other questions we got, Jonathan?
That is all we have at the moment.
Let's continue through the rest of these. We just have a few more slides. So make sure to join our mailing list. You don't have to be in the DC chapter, but we get out regular updates on when we're going to be doing the next of these. And while you're there, go over to the Maryland chapter and sign up for their mailing list as well. Next slide. Kent, why don't you tell us about volunteering?
All righty. So as you all know, everyone here who's on this call is a volunteer, and the Maryland and DC chapters are completely run by volunteers, and they are essentially the way we keep this organization running. Now, chapter volunteers can get all kinds of benefits by learning new skills, but in addition to that, you can get subscriptions to the online data feed, as well as access to the Mutual Fund Education Center. So there's a lot of benefits for being a volunteer, but I think the best benefit I get out of it is getting to meet all kinds of good and very smart people that help me understand investing a whole lot better. So that's all I have.
Well, I was going to say, and also with that is that the new education series that we're doing that's charging a nominal $10. If you're one of our regular people that help out as a volunteer, you get to go those for free. That's one of the ways I got involved in this, was I wanted to learn more and was willing to give some sweat equity so I could sit there and go to the classes for free. So talk to us at those contact numbers on the previous slide to learn more. Let's go to our next slide, please. There are the stocks we're going to be looking at next month: Church and Dwight, Ford, and then we're going to do, if I'm saying this right, Ignacio Eagle Mines, and then Evercore. So start looking at those for you. And let's, I just have one or two more slides. We won't have to talk about these. Let's go to the next one. I put in here the Manifest dashboards. I've been tracking everything we've been doing on Manifest in 4 separate public dashboards. So you can just sort of see the performance, not of our judgments, but just of when we presented it, how it is done since we presented it. Let's go to the next slide. And you don't have to, it's a subscription to see a lot of the more detailed stuff, but the public dashboards are free. You don't need a subscription. Again, download these handouts, click on that hyperlink, and it will take you right there. Or once you get in there, you can just go over to the public dashboards and type in digging, and you will find all 4 of them. Next slide. So there they are, and go ahead and enjoy. And that is it. And we will see you next month when we dig into the BI in October. Thank you for attending.